Hello, and welcome to another update video about Bitcoin. Yeah, we start on the daily time frame. I believe there could be some further consolidation on the weekend. What we're tracking here is still evolving wave 4 correction, which likely, is not finished. And this wave 4 in the white scenario could stretch out a little lower. I'm not saying, that we have to reach the next Fibonacci retracement level at 82K. It's very much possible that the price only dips into the blue target area between round about 87.4K and yeah, I mean 79K, but I don't expect such a deep pullback. That would be a little bit unusual, I would say. I mean, it's possible, it's valid, but it would be a little bit unusual. What I think would happen is possibly just a dip to 87.4K or 82.4. These are the two main scenarios I'm tracking right now, both into the direction lower in the short term. In the very short term, we might see a little bit more of a bounce, and it's the quality and the size of the bounce which should tell us whether we are likely going to go a little bit lower in the next correction, or whether it might just whether the price might just react here to that 100% extension, which is a very common target for such a C wave. Because let me explain it to you here on the daily chart first. What could happen is that this C wave unfolds in a nicely defined 5-wave structure. Then we probably already saw the wave 1. We're now in a wave 2, 3, 4, 5. And it depends on how high this internal bounce goes. Depends on exactly that factor, where the decline then eventually lands, okay? And ironically, the higher it goes, the deeper the pullback could go. All right, it is a bit counterintuitive. So if it's a very shallow move up, very weak bounce, it might only need to go to 87.4K. And that has to do with the internal wave structures of the move. And yeah, it's a bit counterintuitive, but that is what I'm watching for. So that means it is central to pay close attention to the quality and the size of the bounce which is currently happening. And again, it's not a guarantee for anything. It's only like, it's the higher it goes, the higher the probabilities it will dip further. The easiest way to understand that is to think about it like, there are certain indicators, and they need to be reset. They were a little bit oversold, and the higher the market now recovers, the more it recovers, the more space also the indicators will give the market to drop afterwards. But essentially it's related to Elliott Wave, to Elliott Wave counts, because there are two pathways I can see here with a high likelihood. So if this is a wave 1 down, then the size of the wave 2 will determine where we will land below. And if it's a healthy move up, it is likely a wave 2. And if it's a wave 2, a third wave should follow, which is a rapid decline, followed by a wave 4 and a wave 5 to complete the C wave of the larger correction, which would take us down lower. If it's only a very shallow move up, which might even stay below 96,354. So if we don't even reach resistance, it is entirely possible that the market forms a slightly different pattern, and that, it could be wave 1, wave 2, wave 3, wave 4, wave 5, and that could be the correction. So it's a slightly different internal wave structure. Now we'll have to, all I'm saying, we can't really predict this. All I'm saying is, once the market starts to give us signals that we are moving down, so specifically if there is a break below the 91,450 level, which is the Thursday low, well, once that occurs, we have to pay close attention to this 100% extension at around 87,400. So I'm going to watch for reaction there once the market starts to dip. At the moment, we see a little bit of a recovery, which again could just be that wave 2 internal bounce. I don't have a very clear microstructure. What I think could be happening is maybe even rather a WXY structure here to the upside. So the move down was 5 waves, and wave 1 either bottomed here on the 8th of January or on the 9th. And the move up, well, it could be a WXY structure, the way this looks at the moment. For example, WXY. And then in the Y wave, we're dealing with an ABC structure. That's just one of many ways how this could unfold on the micro. This is just noise, really, essentially. What really matters is, can the bulls form a 5-wave move up that breaks even above resistance? Only then I would consider a low already in, but that would not be the most probable scenario right now. I would need to see more evidence for that. So in summary, we are still in the same situation as yesterday. The market is trying to form a more healthy, let's say, wave 2 over the weekend. The resistance area is defined between 96,354 and 100,518 US dollars. And I expect a little bit more consolidation over the weekend. That could involve maybe a small recovery rally into the resistance zone. But essentially, it takes a break below that last low, located at 92,280, followed by a break below 91,450 to indicate the next move down has begun. And once the decline begins, I will pay close attention first to 87,480 to see if the market forms a low there a little early. It takes a 5-wave move above 100,518 to indicate that a low has been established a bit earlier than expected, but that is currently not the most probable scenario. Thank you very much. Bye-bye.